Good day, traders. I trust you are well. Let's have a look at UK100, FTSE100 derivative, as I like to think of it, this past week. This is the full day of Monday. Now, the thing you got to bear in mind, of course, is when you trade in a particular exchange, you've got to be looking at when the market actually opens in terms of that first candle. Very important to note the first candle. Now, the markets are opening my local time. They are opening right here, 10 o'clock my local time. So let's just, 10 o'clock MT4 time. My normal time, my local time is 9 o'clock, and UK100, our earlier 8 o'clock. So that's the first candle of the session. Now, doing a review of it, of course, remember you can trade the markets at any time. If you come into the Asian session, as your broker starts to give the feed, I'm always wary about the very first candle as you cross over for the days. I usually just leave it. Let the MT4 do stuff. Let your broker do their stuff, whatever gets settled in, and then start to look at what took place. Now, very interestingly, as you have a look, remember the market is unfolding as you're going through the day. There was a low, there was a high, so it's a trading range right at the open. And when you've seen tight trading ranges, you don't have enough room to trade from the bottom to the top. If you trade the way that I'm trying to get you to trade, swing trading, easier to make money. A lot of, some guys are scalpers. Scalping is extremely hard. Guys who scalp for a few points, few pips here and there, and they'll tell you I'm in, I'm out. Very hard to even see what they're doing. So let's, if you've got a scalper who is teaching you, fantastic. I'm a swing trader. So gotta wait for movement to have a look and see what's taking place. So tight trading range, not much happening here. This is an interesting candle. Had this been a bear candle, you think, bears are breaking out beneath the candle. So let's trade, but gap down. So best to wait. See if bulls are strong, bulls are not strong, bears come back. We hope to see if bears are going to break out beneath here, so we can accelerate down, and we don't get bears breaking out. So we end up with another trading range, tight trading range, and you can see it like that. Bears try to break out, fail. So pretty difficult. Morning or difficult in terms of opportunities are not there. But if you were in the market around here, and maybe you had your trading range like that, and you saw that, I think I'm going to sell that because the bears may be coming to the market. Fantastic, you take that. I don't put my stop here. Stop is above the trading range. You put a stop. When you see that failing, you get out, right? Because the bears are not following through. Or if you can't get out quickly, just pull your stop down, drag your stop, and get stopped out with minimal risk, fractions of the original risk. Now we're going back in to test the high of that trading range. If you saw that and you saw that inside candle, and you think, okay, bears fail breakout, bulls are likely to maybe accelerate to test the top of the range, and it's okay to buy above here. I would put a stop here, or even use a measured move stop. So, when you look at the first kind of day, I throw all these terms in so that as you rattle through the rest of them, you can kind of remember. You can use a measured move stop, height of that candle. You can put a stop here in case there's a little bit more, which is perfectly fine. By the way, when you're taking this trade down here, you probably would have said to yourself, well, there is a trading range, there is a high, there is a low, there is a measured move of it. If I take the trade here, we can get here. I can bring my stop to break even and be able to manage my trade. That didn't happen. So when you take that, use a measured move stop, even a stop down here, still almost the same distance. Take a trade, aiming to get to the top of the trading range. When it starts to fail, bring your stop here, so you're in a bit of profit. You may or may not get stopped out, depending where exactly you put it. Try to accelerate up again. Not much room for you to touch in your stop too until that comes. Maybe they've brought your stop up to here, so you get stopped out a little bit of profit. Going into the London Open, be very careful. As tempting as it may be, I don't want to trade the candle before the London sessions, the 15-minute charts. By the way, just wait, nothing, and let's see what happens. So we're that high of that trade range. Bulls try to accelerate up, high test, so it's good for the bears at that moment. Kind of think, well, maybe we have a double top, this and that, or double top with that, fill breakout above these highs. Possibly we have, 3 pushes here, a wedge, a fill breakout. So good for the bears. Trading the first candle, there's things that I look for, and I'll probably do a video sometime on trading the open. But that's pretty decent to try for. But if you take that, remember you got all of this, and there is a law, the present law of the day, created in the Asian session. There is a law of the day. So you take that and think, okay, it's probably a measured move to get to that, just below that. So bears may fail to get to their measured move. But, if I take that and we get down here, I can always manage my stop. But you take that, when you trade the open, you're going to be super alert, right? That's why you trade the open. You take that. Fantastic. You're in the trade. Your stop is up here. That's where you put the stop. You could put a conservative stop out there at the open. It's perfectly fine to do that. So stops is always either above a candle, above a pattern, or a measured move stop. That's perfectly fine. Just depends on your risk profile here and the kind of trader that you are. So you could have taken that, and when it failed, bring your stop down to 50% or here and get stopped out. That is perfectly fine. Now we are back within the trading range. Now we have a high of the session, bears failing, and that's a pretty strong area for the bears, right? Because the bears stop the market going any higher. They want to defend that. Bulls, of course, want to crack above that. We are within the magnetic field of the first candle. I wouldn't do anything. I'm just going to wait. So now we have a trading range that's created. High of session, low of session. The bulls break out about this pretty strongly. The objective is trying to get to that measured move. Bulls try, they fail, and we get that candle. That's worthwhile to take because you don't know this is going to happen, right? But we take that. So back to the principles that I just want to show you quickly as we begin. Look at the first day. There's a trading range that's been created. You want to take that. You can put your stop beneath here. That is perfectly fine. Or you can use a measured move stop of that trading range and put a stop here. Because you're aiming for that. You don't know that's going to happen. In the trade, just move your way, tighten your stop, take off risk, or tighten it. Bit of a concern. Why are we doing this when we want to get there? So at least your stop by the time we get there should probably be at break even. Then you get out, get taken out at break even. Bears couldn't get, bulls couldn't get to their measured move. And we failed. And in our failure, there is within here 3 attempts, 3 wedge, 1, 2, 3, or just a high double top, or a macro double top. So everything's saying to you, bulls are being challenged by the bears. Then when that kicks in, you start thinking, okay, so the bears are strong enough. Now, what is the bears' target? Well, the target is the low of the session. That's the target for the bears. And if they're strong enough, want to get to the low of today. So big enough breakout, breaking that trend line. By the way, I removed trend lines and stuff. Just look at the price action. You can factor them in as additional decision-making tools if you want. So big breakout, you can sell that. Put your stop above here. Could you use a measured move stop of the candle? Of course you could, because with a measured move here, you can do that. If you are a conservative trader, stay conservative. Put your stop there. Will you make money? Of course, if you're taking that and held onto it. 1-to-1 is here. You have been rewarded fantastically. Boom, take your profit and get out. So at any point, you could still make money if you use your stop there. Of course, you get to your profit targets much earlier. Okay, so you could take that, put your stop there, or if you didn't take a breakout pullback, low one breakout, there is a pullback, there's opportunity to go. That tail is a bit of a problem. If I'm taking a follow through after a breakout, I don't want tails on it. So that's a little bit concerning. That is fantastic, but you're getting too close to these levels. where, you might not get your reward. You got to manage your stop is there. So you're assuming, well, let's say you assume that, bears will crackle through this low of the session to test that. So if you still want to take that with the stop up here, you got to manage it, right? By the time it gets to here and it's failing, you took here, bit of a loss. I don't mind touching my stop to 50% of that and get stopped out, or just hold it and see what happens. Okay, if you get stopped out, that's perfectly fine. But if you decided to hold it, then you must hold it. Don't panic when this is happening. Get stopped out. If when you see this, you're going to tighten your stop to here. Okay, if you didn't take this particular trade and you take that trade and you start to see this, you can put your stop here and say, well, let's see if this will hold, or tighten your stop and get stopped out. 2-bar reversal, lower high, good enough to take and see if we get down to here. So you can still take that. And again, if you're taking that, I prefer to put my stop there. Okay, if you want to be a little bit more aggressive, you can put your stop above that high low, which is almost the same as here. I don't like to take that micro double top with a tight stop. I'd like to use a measured move stop or look for a level to the left. In any case, anyway, if you're taking that trading range, just let it go. If a tight trading range is here, tight trading is here, just wait and see what happens. There's no way for you to tighten your stop while this is happening. So if you took a stop here, you put your stop. If you tighten your stop, they're just gonna have to wait. I mean, don't put random stops in. Just move it. You're gonna get stopped out. But in any case, you'd have been rewarded fantastically. Manage your trade. Either take profits, whatever. If you tighten your stop here, spread on UK100 maybe 15-minute chat, maybe not stopped here, but might have been stopped out. Anyway, we're beneath the low of today, low of session. Good enough to try and get in again to the market. This is way into the US session now. US session started. Yeah, interesting. Look at that. London session bear candle, US session bull candle, but we still went and sold off for the rest of the day. So, when the market is doing this, if you're in a trade, there's nothing to do. If you're not in a trade, wait. This is not enough breakout, nothing for me to sell beneath here. Maybe I'll start to try and sell beneath here. Now I have, candles closing below. That didn't get triggered at all. That didn't get triggered. And you're getting to the end of the US session, probably nothing. Or you can still trade, but towards the end of the day, US session, all sorts of dramatic things can happen. So pretty interesting. There are a few principles that popped in there. Now popping through to the next day. In terms of bulls, so, right from the open, bull channel, tight channel here. Not giving you enough room to trade, no significant breakup. But when you start to get here, this was from yesterday. Let me take it off. When you start to break above here, opportunities for you to jump into the market. I mean, that would have been a beauty, right? Jump into the market here or here. Stop is down here, and you just wait. Trail your stop. If you trail your stop aggressively, you get stopped out. Nothing else for you to do in here. When I say nothing else to do, actually up to let's do that. It's going to look a bit untidy. And then there's that. Okay, so we had that. Now let's put in this convergent triangle. We had a tight trading range near another tight trading range. When you get a breakout, you can take that trade, but your stop is going to be somewhere down here. Okay, and you might have tightened it, get out a little bit of a loss. Would you take this trade? If you're taking this trade, you can't ignore that. Okay, if you use a measured move stop and you take that trade, you've got to be willing to. As soon as you're in the trade, starts to go your way, take off some risk. After the trade, get to break even, hopefully get rewarded, but you'd have gotten out at break even there. And our first candle was here. I should just put that in quickly for you guys. And that's the first candle of the US session. Okay, tight trading range into the US session. We have a higher low double bottom here. Okay, and you're going into the US session. It's worthwhile to wait unless you know the pretty distinct, let's say a low test here. If you took out the measured move stop into the US session, you can manage it. But you know, if it's trading range like this, just wait. US session bull candle, fantastic. You gotta take that, guys. You know, if you take that, stop beneath here. You know, just give it a bit of a birth white stop here. You can put it beneath here if you want, but I'll put a stop here. You'd have been rewarded quite nicely. You know, maybe if you'd held onto your trade, which you should have, take the trade. That's, you know, got to break even, just wait. If you tighten too quickly, you get stopped out, you'd have missed on this particular action. But if you didn't, just held onto it, which is, you know, at break even, let's say you got in there just at the open. Okay. If you brought your stop to, when I say at break even, by the way, not randomly, it's never actually quite break even until you see a trend candle. So you got in there, you gotta hold your stop just here until you see another trend candle. Was that good enough to be a trend candle? No, none of these were. So they frightened you and you moved your stop and got stopped up. But if you just waited, eventually got the reward, then you can move your stop to there. And we're going late into the US session. You know, you can take that particular trade. All right, so quickly into this day. And US. On hindsight, this was a proper like rubbish day, right? If you just look at it. Okay, Asian session. You know, get all of this stuff. Nothing for us to trade here. You get here, decent enough candle, try and trade it. Nothing for you to get in. Every low of the day. We have a higher low right here. Breakout above it. You could take that trade and put the stop here. And just kind of go backwards, you know, until we probably just get out, break even, or you know, slight loss somewhere later on. Market trying to test the low of the session, because that's London open, so low of the session. Still been trying to test. They're still trying to test that. You can take that trade, you know, even if you're scalping, it's a bit foolish to jump in right into the low of the session. Just wait to see if the bears are strong. You get a high low, we're going straight into London session. If you're bold and say, okay, I'm going to take this and see what happens into London session, put your stop down here, start to accelerate up. Before the session, you're going to tighten your stop in case it fails, right? You would sit there and say, fantastic, man, I'm going to make some cash. And then it fails immediately. You can't buy first candle, you can't sell. It's just nothing for you to do. And all of this is now just within that magnetic force, as I call it, of that first candle. So nothing to do. We have a higher low. Here, I'm not going to trade into this. Just going to wait. Eventually, we have a double top. Okay, we have a bit of a wedge. 1, 2, 3, fail breakout, double top. Maybe you want to accelerate down, probably sell the second candle. Here, stop above here, hoping to see what happens if we get down here. US session. So you'd have been rewarded a little bit. Get into the US session, you got to touch your stop, because you don't know whether they're going to get this or they're going to accelerate down. And then we just go sideways, tight trading range. I'm trying to get tight trading range. Good enough for the bulls. You know, if you take that and put your stop here, can you get 1-to-1? You barely can get 1-to-1. You know, but if you take that, open for that to be tested, maybe get a little bit more, you gotta be smart, right? Or sharp. Put your stop here, or even put your stop here. We start to accelerate up, take off some risk, decent enough candle, take off some more risk, and then just wait, and eventually way into the US session. If you sit through that, you would have been rewarded. Pretty much of a difficult day, except for that late part. Asian session, Thursday. This was an interesting day. Yes, I remember this. I remember that US session. Okay, if you've been trading the Asian session, somewhere within here, let it open, decent enough breakout beneath that candle. Bear candle, you could sell that, and then when you get that good reward inside candle, you have to move your stop and get out. Tight trading range, trade above that, stop beneath here. Gone sideways, break even trade. Another breakout, fantastic. Going into London session, you need to tighten your stop. And then that's the first kind of London session. Remember seeing that? So that's good for the bulls. But why do we have that tail? Let's wait a little bit. Then we got that follow through candle. Good enough to take that trade, stop here. And then you're just going to have to wait. And you would have, if you'd waited, eventually got your 1-to-1 right up here at the double top. Fantastic opportunity for the bulls. Could have added in above this as well and be able to manage your trade. Because you don't know how far it's going to go, but then that probably just a break-even trade, double top, lower high. Take that trade, go into the US session, manage your trades, tighten your stop, and make sure at the time you get to your session, your stop is as tight as possible. You would have been stopped out immediately, or if you're still holding, then you must get out, right? Good for the bulls, London Open bulls. US Open, same kind of structure, almost, tail on top here, questionable, tail on top, tail below, good follow through, that you should buy. See if we get test here, but then ended up getting a little bit further up. So that would have been a good reward for you if you were willing to take those trades. And finally, for those of us who traded through Friday. On Fridays, I'm out after the London session. Friday is my studio day. I do a lot of recording. I do a lot of other research and stuff, things that I work on. So, and it's also a half day. So it's a half day for me. All right. So look at this big candle. I'm not sure what's happening. Maybe there's a news announcement. Whatever the case may be, at this been on its lows, I would have said, well, good one to take and see how far you go. But in case if you took it, in any case, because of a small tail, your stop is here or your stop is above there, above the breakout or above there. When it fails like that, you got to be tightening your stop, and you get out. Eventually, in the trading range, breakout fails, and we're getting into the UK Open. Bull candle, good for the bulls. And you think, well, this is pretty good. We just ended up right here. At those highs, you can see the bears really fought, those highs, double tops, wedge tops, failed breakout, high tests, all sorts of things. So the bears who created this have defended their position. And now the bulls are coming back, and you're like, oh my goodness, the bulls are strong. If they can give us a close above here, a candle above here. So the first candle, you're going to open, the bulls are strong. It's just going to just close above here because then the bulls are going to accelerate. But they fail, wait for the next candle. Bulls come in, get a high test candle. So all these bears now have a beautiful wedge. 1, 2, 3, and that middle part has been strongly defended. Microwave also still beautiful things in there. There's even a lower high within there. So you got to sell that, but you got to use a measured move stop. You have to use a measured move stop because the bulls might just come in. Measure move stop and just hold it all the way through. We have scaled in here some stage if you didn't rush to touch your stop, and eventually get out around somewhere. So there, a beautiful trade for the week for the bears. So guys, that is what I have for you. All of this stuff I cover in detail in my course, of course, and keep those questions coming. And I look forward to catching up with you. The name is Dr. George Nyabadza, your price action trader. Bye-bye.